With the United States closed for the Memorial Day public holiday, most eyes were focused on news out of Europe. And coming out of Europe, there's some optimism about the Greek situation. Viewers will recall yesterday I mentioned that polls had showed that the pro-bailout parties could potentially form a government if the current polls hold true to election day. Well, this was actually also supported by a survey in terms of Greek popular opinion, which showed around 82% of Greeks would like Greece to stay in the euro. However, some bad news. The Greek government had to fork out around 18 billion euros to the four top banks in Greece, but this is primarily to allow those banks to access emergency bailout funds from the European Central Bank. Across the Adriatic in Italy, Italian business confidence is beginning to crumble and is now down at levels last seen around 3 years ago. And also in terms of fellow Latins, Spain, the Spanish bond yields continue to blow out, with government 10-year bonds now fetching more than 6.5%. So what impact on markets? As I mentioned, in terms of US, the markets were closed for Memorial Day. The European markets were relatively flat, the UK market up slightly, but the remainder's down. The major impact, however, was in terms of currency, with investors focusing on that optimism around Greece. Both Australian dollar and New Zealand dollar both took a bit of flight from that and spiked up, with the Kiwi up through the 76 US cent barrier again. Just like New Zealand, it's been a stellar milk production season to date for the US. US milk production figures for April were up around 3% on the previous year. But looking at the quarter ended 31 March 2012, milk production in the US was up around 5.2% on the previous year. Interestingly enough, however, the herd size is only up around 1%. So what this means is that more milk is coming from a relatively flat number of cows. This is probably driven by the fact that it's been a much better growing season this year in terms of grass. Viewers will recall that last year the US was racked by some significant droughts. Looking forward, the US Department of Agriculture predicts that milk production in the US for 2013 will actually be marginally higher than 2012. Interestingly enough, and probably paradoxically, the USDA also believes that US dairy herd sizes will actually decrease next year. The primary reasons for this are, in fact, the falling milk price for 2012 coupled with continued high feed prices. So looking forward though, the US Department of Agriculture also believes that that supply bubble will also run through the market and that we'll see dairy prices increasing towards the back of 2013. And that prediction is good news not only for US dairy farmers, but also for dairy farmers here in good old New Zealand.